S&P 500 and junk debt is approaching record highs. Gold moved higher, and this is despite the strong dollar. We'll also look at energy companies, which are exhibiting strength, and this could translate into higher prices for gas at the pump. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 17, 2025. Don't forget to donate to the victims of the Los Angeles fires. Probably the best one is to donate to the American Red Cross. Always, please don't forget to hit the like button, subscribe to this channel, share this video. If you are not yet a subscriber, consider signing up by going to MasterChartsTrading.com or following the link in the description. If you're a subscriber, stay tuned. We'll be covering various securities as well as market breadth, and we'll cover various American ETFs, European, as well as some of the foreign non-United States ETFs, large cap stocks, some speculative securities, and gold-related stocks. Looking at S&P 500 currently, let's look at the 4-hour chart first. So 4-hour chart just means that each candlestick is a 4 hours worth of activity, and this particular security that I'm looking at is ticker symbol US 500, and you want to find let me just show you the one that I like, this one right here, after prime. So it's S&P 500 cash contract for difference. So contract for difference just means that basically it's futures, S&P 500 futures, but are traded much more easier than the futures account. In the United States, unfortunately, this particular security is not available. But if you are not in the United States, you are able to trade this security. So looking at this 4-hour chart, we can see that we dropped below, at the lowest point here in January, on January 12th. Remember, this is a 4-hour chart, so each candlestick is 4 hours, and there are 6 candlesticks in the 24-hour period. So notice that we kind of bottomed around there, and I actually sent an alert out to my subscribers, not so much an alert, more like heads up that most likely we will be moving higher into the inauguration. We did just that. I just didn't realize how quickly we moved higher, especially this giant candlestick on the 15th of January. And again, today we're breaking out, notice, above this blue support resistance line. This is my indicators. You can see on this chart, the Master Charts Trading indicators. So this breakout is definitely bullish. We're approaching records. We can look at the daily chart now. So right now we're looking at the daily chart. Each candlestick is a day's worth of activity. Notice that we're approaching records that were set in January, about a month ago or so. Sorry, December 6th rather, month and a half ago. And currently we are, we're approaching previous highs. For example, one here from January 6th, and then another one from 26th of December. And we're sort of approaching that level. So if we break above them, then it's almost a guarantee that we'll see new records. So we are definitely in an uptrend, definitely bullish. Last opportunity to buy S&P 500 was back in November 2023, a while back. Why? Because this is where the my indicators showed that we had a lower risk. So we had at that time in July of 2023, we had an all-time high, and we had a pullback towards the blue line, and we basically, that's where we want to be buying. And so definitely we're a very successful trade. And at this point, I probably don't have, or rather, I would just have long positions. In other words, I would just hold them. I would not be opening anything new for this particular ETF S&P 500. If, obviously we are trading individual stocks, and they are showing some good setups, and we are trading them. So for example, you can see that we are seeing lots of various stocks like Caterpillar, FedEx, General Motors, as well as various ETFs as well, exchange traded funds. So for now, looks like stocks are headed for at least retest of these previous peaks, but possibly for a retest of the record highs. High yield bonds, junk debt are also doing quite well, especially notice this gap between 14th and 15th of January where I'm hovering. It's a very large gap. It's a breakout above the previous highs from the 7th of January. We're super close to record highs. So this is, again, in my book, a good sign when high yield bonds are actually leading stocks higher. So this is definitely a good sign, and we want to see more of such behavior. This is what we call a bullish divergence. In other words, high yield bonds are outpacing the gains for stocks currently, and I think this is again a good sign. The reason for this whole thing is because if we look on a more longer term time frame, high yield bonds correlate, or they're doing a very similar thing to the S&P 500 very highly. So you can see the correlation coefficient down below here, and it's very much positive. So when stocks and high yield bonds, junk debt, are moving together in lockstep, this is exactly what we want to see, no divergences. Let's look at the dollar currency index. So US dollar currency index, current ticker symbol DXY. Again, not really tradable in the United States, but tradable in elsewhere. We just hit a 2-year high. This is a 2-year high. We can look at the weekly chart as well. So here's the weekly chart of dollar currency index. Notice this breakout. This is highest level since 2023. So we're very close to challenging previous highs that were set in October 2022. So dollar is doing quite well, obviously. Dollar doing so well usually weighs on gold. Currently we're looking at gold. This is XAU divided by USD. Notice that nothing, even though dollar is moving higher, gold should be pulling back, because gold divided by US dollar, so this bottom part of this equation should have pulled this currency pair lower, but actually the opposite is happening, and we see that dollar and gold are moving together in lockstep. Gold is currently challenging previous highs that were set back in November as well as December. I think once they're broken again, we can just pop to new records and set new records. We're very close to new records again. So despite strength of dollar, gold is doing quite well, and also we are trading gold miners. So if you're a subscriber, stay tuned. We have quite a bit of gold miners to cover as well. Finally, I want to touch quickly on energy, XLE. So XLE is a energy fund that has many oil companies. Previous alert was sent back here in December of last year. Now, normally, and notice that we saw a pretty big drop and now a rally towards, I believe this is actually a record highs. Let me double check. Yeah, they're approaching record highs. So energy companies are doing quite well, most likely because US oil or crude oil, held support in this area of around $65, $68. And it never burst through that to the downside. So I kept saying that this area somewhere between $65 and $68 would be very important, and indeed that area has held, and now we see a rally and a new breakout towards into a new potential bull market. So we're seeing breakout above this blue support resistance line, which implies a potential new bull market for oil. So strength for oil companies, strength for oil probably will translate to higher prices for gas at the pump. I mean, I keep hearing things about Donald Trump trying to bring the oil prices down. Hopefully it will work, but for now I don't see it happening yet. So for now I think oil prices are again in an uptrend. I mean, we could see like 83, $86, maybe even higher for crude oil. So we'll see where new policies will lead us, but for now I don't really see it that pronounced yet. I don't see any, obviously, lower oil prices. All right, that's it for this week's recap. Please stay tuned on how to find me on the internet. Other than that, don't forget to hit the like button, subscribe to this channel, share this video. Thank you for watching. So head over to MasterChartsTrading.com, click on sign up one of the products. So again, I have 2 products in one bundle, and I have both monthly subscriptions and as well as yearly subscriptions. So yearly equivalent is displayed here. So if, for example, both indicators and newsletters are $59.95 per month on monthly basis, they are $49.95 per month if you prepay for a year ahead. So equivalent of that much. So which translates to $17. Basically, I send out alerts about various securities that we trade. So for the newsletter, as well as, of course, trading indicators. So these indicators, you can see them on this line, these lines on the chart. These green, blue, red, and yellow lines, the horizontal ones. They're used to trade pretty much anything under the sun, and you can use them to find support and resistance for various securities, as well as stocks, bonds, pretty much anything that is tradable, currencies, cryptocurrencies, etc. And so they are available for TradingView.com. This TradingView.com interface. Once you sign up on TradingView.com, free TradingView.com sign up, come back to Master Charts Trading, sign up for my indicators, and I'll open the door for you on TradingView. It sounds convoluted, but it's not. It's really easy. So we just need to follow the procedure. Again, if you have any questions, send me a message. I have many different social networks that you can find me at. You can send me a message directly here. You can also send me a message through TradingView, X, formerly Twitter, YouTube, StockTwits, etc. Let me know if you have any questions. Thank you for watching. Have another great trading week. Bye-bye.